The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. We are coming into a new moon tomorrow, and this has special qualities to it because it's coming in at perigee, where the Earth is as close to the moon as it gets, and it also is the zero declination of crossing the equator at the same time today. So all this was coming within the next 24 to 36 hours, and since we're making new highs in the market, that is usually an indication that we're getting ready for some type of a correction. However, it's different this time, as we've been told, and folks, I really truly believe that it is different this time. It's a lot worse than they're telling us. That's my opinion, but we'll see what happens. Okay, now the first chart that I want to talk, someone asked a question about what percentage of do butterfly patterns work. The same percentage that Gartley's have, and that is that runs around 75% of the time the Gartley pattern will work, and then about 75% of the time it's the same thing with the butterfly patterns. The thing is, the butterfly, it could fail first at the 1.27 and then go on up at the 1.618 and then reverse. So that's the main thing. Now, the first chart that we're going to talk about today is Apple. We had a request to look at Apple. And I wanted to go back to where we were when we were at 700 in Apple back in September of last year, a little more than 16, 17 months ago. And basically what's happened after we were up there hanging there for a whole week with virtually no volatility, the market gapped down, leaving a pretty large gap, and then it broke all the way down to 385, where it completed the ABCD pattern that we were looking for. Now what's happened, folks, is we've completed a perfect ABCD pattern today, and it is, right at the 1.27 expansion. The high today was 564.33, and the big number, the 1.27, was within 80 cents of that, and we've already come off $11 from that in Apple. So I'm assuming that that's what's happening, is that we're making this top in Apple at this particular time in perfect harmony. Now, if it gets above 565, then this analysis would certainly be wrong, and you'd have to look at something else. But frankly, it looks like it's holding its own right in this area, and so I think you have to pay really close attention to it. Now, we have a couple of markets that are in deep trouble. I'm sure you're aware of the gold market is looking relatively poorly, and also we're also having I'm going to go to bonds first because it's many times bigger than the gold market, and we're having bonds breaking down now below the 61% retracement of last week's lows. They're down over a full point. Folks, if you take a look at asset classes, the commodities are coming down, the bonds are coming down. The only asset class that's still up there is the stock market. So I don't know, maybe it is different this time, but we'll have to wait and see. I'm going to go show you some statistics here in just a little bit about what I see happening, but whether that is in fact going to be the case or not remains to be seen. So just keep in mind now that bonds are below the 61% retracement. They're down well over a full point. For them to reverse today would be highly unusual. There's a little bit of support coming in, about 8 ticks lower in the bonds, down at the 130.21 level. Now, we've switched over from March to December, but I'm still using December bonds because it has better data and gives me a clear picture of what's really happening, in the bond market. But it looks like it's heading lower, along with gold, silver, soybeans, corn, copper. I mean, they're all going down. I mean, if this is a great economy and we have such wonderful things happening, folks, why are the commodities going down? I mean, this is not a good thing, but like they say, maybe it's different this time. Now, we have one other market that is in deep trouble, and as we've talked about this before, of the significance of the level in in gold, and we have broken below that substantially today after having a little bit of a rally. Silver is doing the same thing, and so the next stop on gold will most probably be somewhere near that double bottom at around 11.75 per ounce, another $50 lower. So it doesn't take very much of a scientist to realize that with this wide-ranging bar down to over $25 today, that something is happening, to the thing. So this is not what the Federal Reserve wanted. They did not want deflation. They put all this money into the system to make the thing look like it was going to be, really good. In fact, it has not done that. So it's telling us that there's something not right, folks. That's all I can tell you. It looks, very, very ominous to me as a technician that of where we are now. We still made a new high in the Nasdaq today. We're about unchanged on the day. The S&P has not made a new high. It's getting close to a 50%, 61% retracement up here at 1809. But I wanted to show you the New York Stock Exchange Index, because we made a new high in the New York Stock Exchange Index on Friday by 0.02%. In other words, on a scale of 10,239, it went 1 point more than the high we made back on November 18th. Now, the Nasdaq, of course, has been parabolic since that time, and the S&P has made a 1.27 expansion, but the overall broad market, the New York Stock Exchange Index, has not taken out the high from November 18th by more than a point. I mean, it's just it's truly amazing. That would qualify it as a potential, double top pattern. But right now, we've got the Dow down 3 points on the day. The Nasdaq is down about a half a point. The S&P is up about 3 points. So there's very little happening. But the overall commodity markets are all in the red. I mean, there's very few of them that are in the positive, and that tells us that there's some deflationary things out there that are very, very ominous indeed. In my opinion. Now, I did a very long-term chart here to show you what I think is happening in some of these markets. And if you'll give me a second here, I will pull it up here. And I wanted to show you the relationships of the Dow at other times when we've had when it was different this time. And if you'll go back to 1999. You'll see that the Dow was making the same kind of pattern that it is making here and the same kind of pattern that it was making in 2007. That's that expanding triangle reverse point wave where you have the 1, 2, 3, 4, 5, with the 5 being the highest point, and that makes it a 3-drive pattern. And we have the same pattern going on now that we had in 99, 2007, and 2013. The problem is it is different this time. This is the mother of all bearish signals, folks. I know I keep yelling fire in the home of an arsonist, but there's something really not right with this picture, because we've completed some major stuff and we've really gone nowhere. If you look at the New York Stock Exchange Index, you look at margin debt is as high as it's been, equal to 1929, 2007, and 2000. And the fact that you've got the advancing issues and declining issues are also giving a little bit of trouble. So just be careful in here with your with your portfolios and stuff like that. So just be very, very careful. That's my advice for the day. Whether that turns out to be good advice or not, we have to wait and see. Now, the next chart that I prepared for you is the chart that goes back to the same 1999 high, and it shows that the Dow topped in January of 2000, but the Nasdaq still kept going straight up for another several months. It didn't stop until March 24th of 2000, when the Nasdaq was almost exactly at 5,000. It hit 4,900 and change. It never made 5,000, but on the cover of Time Magazine, U.S. Business News and World Report, and Business Week, they all had the same cover that week. I believe it was NASDAQ 5,000, and it was telling us that the market was, giving us a top at that time, and you can see that it gave back more than 85% of its gains over the next 2 years. The same thing occurred in 2007. We had that same type of pattern occurring, and now you'll notice that the NASDAQ is still not taking out the highs from 2000. But the reason for that is many of those stocks have gone bankrupt. They used to be trading for $150, $200 a share, and they just didn't make it. I'm thinking of stocks like CMGI and Sycamore Networks and GoToNet. There were just all kinds of them that were in there that were going crazy to the upside, but they've in fact done this. We got a call from Steve in Houston, Texas. Can I help you, Steve?
Yes, Larry, thank you so much for being on here and going over all this stuff for us. I just wanted to ask you about cash. What your thought is on just having cash on hand? Well,
if you read history, Joe Kennedy, John Kennedy's father, made his big fortune, his huge fortune. He was a bootlegger. I don't know, most of people don't realize, but that's what he did. But during the crash of 1929 and the ensuing depression, he was heavily in cash, and he bought stuff at very, very cheap prices. As a matter of fact, the Merchandise Mart in Chicago was just finished in 1932, I believe. It was right around that time, and he paid, I think, $900,000 for it. And they held it through the family up until the mid-'70s, I believe. And the rent per month around that time was about $1.9 million per month, as I recall. So he made most of his money by being in cash and buying stuff at a very cheap price when nobody had any money. So, frankly, I have a very small short position on in the S&P that I put on around 1797. I'm using a very wide stop on that above 1840, and I've been short some of the commodities, which has been good, and been trading the currencies, which is related to cash, and we're starting to see really good volatility in the currencies, particularly the pound and the euro and stuff. These are the things that you really want to start seeing when money starts to move away from the traditional things that they're looking at. So that's the main thing that I'm watching, and I try to be as much cash as I can right now.
Well, that's my thought too, Larry, because everything is digitized now, and very few people have cash, real money. Real money is gold, but I mean, as far as our dollar is concerned, the cash itself, the currency itself, they have it digitized in accounts in the banks. And
Stephen, stay with us till the break, okay? Will you stay with us till the break?
Yes.
Okay, please do. Dow down. Actually, Dow's up on the day now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we still have Stephen on the line from Houston. Stephen, are you still there?
Yes.
One of the folks in the Tiger Den just brought up an interesting point, and that is that the banking index is something that we ought to keep an eye on, because if that's going to be the thing that turns down, we'll have to wait and see if that index is actually, started to turn down. I wouldn't worry about the cash too much. The history says that you try to do the opposite of what the banks are trying to do, and it makes no sense to put money into a passbook account where they're paying you 0.5% or something like that. And I think that's what the rate is, and that doesn't make any sense to me. But you can't invest it in commodities because they're falling down, and so the only thing you're forced to do is to buy stocks. And I don't believe, by looking at the New York Stock Exchange Index, that this breakout that they're talking about is actually occurring. It's just a big smokescreen, in my opinion. But I've been wrong before.
What I'm talking about, Larry, is having cash on hand outside the bank.
Oh yeah, I know that. That's what I do. I agree with that. First of all, I always buy a little gold every month. Yes. I've been doing that for years. Sometimes it's high, sometimes it's cheap, but I've always done that because it's real money.
Right.
And and I always keep a little cash on hand, so mainly because I worry about the computers breaking down, and if you have a credit card economy, and I don't use credit cards, you're in big trouble if you try to buy something because everything runs on credit.
Well, that's I use the dumbbell effect. Where I have, way on one end I have cash, and way on the other end I have gold and silver. So that way, no matter which way this thing, you have something that you can exchange that is worth something.
Absolutely. There's only one other piece of information I need from you, Stephen.
Yeah.
Your address.
That's a good point.
Just make sure you put some Claymore mines around your house so that you're protected. You know.
Well, there's ways of handling that too, but the point of it is exactly that. At some point in time, this is going to be. Our generations have never experienced a depression. Never. Yeah. You know, I wasn't around then, and I don't think too many people were, that are still around. There's not very many. And a depression is something that people don't know how to deal with. And that may be something that comes into play. I don't know if you know that Puerto Rico...
I believe that is going to come into play because, Bernanke spent his whole PhD thesis on how not to have a depression, and I think that the Fed is the one that's causing this problem now. We would be coming out of the cycle pretty good by now, but they've inflated it with all this extra cash that is helping the banks and the brokerage houses and stuff, but it's not helping the overall economy. I mean, it really isn't. We've seen a softening in real estate just recently here the last 2 months here in Tucson. I mean, it's even more than the seasonal effect that you get during the holidays, and it's happening in other parts of Arizona also, but I don't know if that's going to be happening worldwide because of some things. But my children were here this weekend, and we were talking a little bit about my grandparents and stuff and what they went through, and here's my little grandson. He's got 3 different types of computers. He can do all kinds of things with email and Twitter and all this other stuff that, totally beyond me. And, when I was a little kid, the main thing I had to do was go out and do the gardening with my grandmother. I mean, give me a break. I mean, these guys are rocket science at 13 years old now.
That's true. That's true. Yeah. But anyway, thank you so much, Larry. I know you got other callers on the line. I appreciate it so much.
Thank you for calling in, and happy holidays to you, Stephen.
You too. Bye-bye.
Okay, we got a call from Lou in Connecticut. Lou, are you there?
Hi, buddy. How you doing?
I'm good. Now, listen, we're probably going to have to take a break here, so you stay with us till after the break. But go ahead. What can I do for you?
The last month or so, you've been looking for a top and the cycle dates and the days, and everything's like upside down, inside out. I would like you to review that and,
Sure. In fact, that'll be your question, and I will take care of that after the break. I have the charts prepared to look for it. Uh-huh. But basically, when I do this, I look at the really broad market, which is the New York Stock Exchange Index, and it has not taken the high out from November 18th. But, once we went above 1,780 in the S&P, that told us that our next target was going to be right around 1,800. And today, we're starting the cycle for the new moon, which is, like I said earlier in the show, that it's a very important cycle that is coming in here. But it's the patterns that I'm watching mostly on the long-term basis, and those might take as much as a month or two to form, and these are also bearish. We got the Dow up a little bit, the NASDAQ up a little bit, and the S&P up a little bit.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, I'm back, and I posted a chart that comes from Bloomberg, and it basically, I've called it the kiss of death chart because it shows the number of times that we've had the situation in the market like we have now. This is not talking about patterns. This is just talking about the price-earnings ratios of the stock are very high. We have the largest number of bulls, the smallest number of bears, which is incredibly good. We have advancing issues, falling behind, declining issues, and we have all these patterns completing. And we've only had this happen 4 times in the market: 1973, 1987, 1999, 2007, and we've had it happen 3 times so far this year. We had it happen in May, August, and November, and we're continuing it here into December here because we are in the second day of December here with the market coming in to this high on what we think is going to be a high of the new moon that's coming in at this time right here. But I think this is probably the most scary chart that I've seen in a long time. If you were to turn this upside down, I would be incredibly bullish, but unfortunately it's the opposite way, so that tells us that there's something, really big out here. I don't know what it's going to be, what's going to trigger it, but these types of patterns don't fail very often. As a matter of fact, I went back and looked in the history to see if I've had one that would fail from this level. And frankly, with all these things that are there, that just, it just looks very, very suspicious. If you were to do just the New York Stock Exchange Index chart and use that as the chart that you were looking for, you'd see that the market is making a giant double top from where we were, just oh my gosh, I guess it was about a month ago. Not much has really happened, to the market from those levels. It's just basically been, a straight up move in all the other indices with the exception of the New York Stock Exchange Index, which has not made new highs. I'm going to put that in there to let you folks see it because it's really an interesting chart, and I think I'm going to put the weekly up, so we'll be able to. I think I'm going to do the monthly. We'll go back even farther.
Hey, Larry.
Yes.
Can you review the Bradley model and what Arch and what you were thinking last month? And you listen. I understand the stuff didn't work, and that's all good. But I like to look at cycles, and I love your work. But you know how you overlay the stuff?
Sure.
For the Bradley model and the S&P and stuff, and how much we're off in the cycle timing and that kind of stuff. What does that mean? I want to learn a little something here.
Well, I do too, Lou. Believe me. And the only chart that I'm looking at here, because the Bradley model should have turned down, I believe on November. No, that was November. I can't even remember the exact date. And the problem that I'm having now is that my Bradley data that I have is I've lost it on this computer because I'm getting ready to leave for Hong Kong. This will be my last show of the week because I'll be traveling to Hong Kong on Wednesday, and I'll be back with you. I might be here on Thursday. I'm not sure what time I arrive there and what the difference in times will be, but I'll be back Monday for sure. But the chart that I posted in here, Lou, on the patterns that I look at is the fact that the Dow Jones Industrial Average 2 days ago, actually it was back on Friday, made the 1.618 expansion up at that 16,158. And as long as we don't get above that, that tells me that this is a pretty strong cycle. But the Bradley model has certainly let you down. I mean, and it does that all the time. So, it's only about 70% right when it's correct. The things that I'm looking at are all the patterns and the ratios of all of these things that absolutely, give me that scare me to death. We haven't had
Arch and the star stuff with the star dates that you use, and what's Arch thinking?
I don't listen to Arch. I mean, Arch is a good friend of mine, but we look at things differently. The key aspects that I looked at came in on November the 25th, and we've gone higher than that. So those aspects are not kicking in yet, and this is 7 days past the 25th, and you can't say that that's working because those aspects got to be within 2 days at the most, and we're already 7 days out. So the only thing that we have right now is the new moon that we're looking at today and tomorrow with the declination and also the perigee. That's all we have to look at. I'm just looking at the patterns of the things that we're watching, and it's telling me that we're close to something very, very scary. I hope that helps, Lou, but I don't have any other information other than that because the timing cycles that I look at are just they're not working. The patterns are still there, but the timing things of the astrology are just not kicking in like I thought they would.
Okay. So and then you just stand aside and wait for one of them to hook up?
Yeah, all I'm doing is waiting to see if we get a reaction off of this lunar cycle that we have now. Like if we take out today's low, that will tell me that the cycle is probably, getting ready to head down, and I would look to be short with my stop above the high that we had Friday. That's the game plan that I'm looking at now.
Okay, let's look at it from a different point of view. It's been working in the commodities because the commodities have turned down on your cycle work.
Oh, yeah, they've been going down for a long time, and that's been good. I've been short some gold and some silver and copper and stuff like that, but the rest of the market is not.
You could use it on something. You got to just see where it's hitting. Just like when Arch goes, there's going to be something bad happening. So we get a big volcano that shuts down Europe. Last year, the year before? Something always is cooking.
Yeah, and not only that, Lou, but sometimes the things that happen don't affect our markets very much.
Right.
Right. So that's the one thing you have to do is you have to look at the price action of what you're watching. And the thing that scares me, to being bullish here is that if you had, advancing issues, exceeding declining issues every day and having new highs and new lows being made every day on a ratio basis, then I would say, yeah, this market's going higher. But that's not what's happening. The overall broad market, the NYSE, is it's already made a double top, and unless it can really get really strong this week, it looks like it's ready to go lower.
Right. I hear you.
Okay.
Yep.
I hope that helps, young man. Maybe it'll turn down one of these days in my lifetime.
Oh yeah, one of these days, they're gonna Bernanke will get stuck up his butt because you know what I mean. He's playing games he don't know nothing he's doing. Well,
even the paranoid man has to be right once, my friend.
Hey, you know why they got economists, don't you? To make weathermen look good.
Thanks for calling in, Lou.
Okay, brother.
Okay, talk to you later. Have a happy holiday.
You too.
Okay. The key figure that if you're watching the Dow Jones Industrial Average is about 100 points from here. If we get the Dow up 100 points in the next 2 days and we close it above 162, I would assume that this market is probably getting ready to make another significantly higher high. But, frankly, that's not what's happening in the New York Stock Exchange index. That is not what's going on. And, the market in that index, I'm going to try to post that in here. And you'll see that we've made a double top here on the weekly basis. We haven't taken out that high by quite a bit in the NYSE, and that's the broader market of what we're looking at. I posted last week, the chart from the bottom of 2009, and what you're looking at right now is the exact opposite of what happened in 2009. The market was making this same pattern, these butterfly patterns, but it was turned upside down. And, you've got the market with margin debt as high as it is. People, and as stocks go up, that gives them more chance to even buy more stock, which is even worse. This is what tagged me pretty bad as a young man back in, 1973. I lost a huge fortune between the high in July to the low in October when there was a crash because of the fact that I was overly leveraged in a market that I had no idea could do something like this. And the same factors are there. The question is it going to turn down this time, or is it really different this time? And I really believe that it is different this time. It is far, far worse than most of us can imagine. That's the real problem that we have when we're looking at it. Folks, we're having some really big breaks in commodity markets. Gold and silver and other corn. I mean, corn has been going down for months. Soybeans made a major top in there today. I mean, just a lot of things. And now you're starting to see it in the bonds. You've got the bonds down, almost a full point here. So that's something that's pretty scary. We got a caller from Peter in San Francisco. Are you there, Peter?
Yes. Hi, Larry. How are you?
Just fine. What can I do for you?
Thank you so much for all your insights. My question is about gold. Looking at the gold contract today, it broke through that 1225. So would you get out of your gold miner equities now?
Well, I was looking at the stock of Barrick Gold last week because it had held up at that 16 level. Let me pull this up here and take a look at it, because if it's breaking down badly. I would have to say this is certainly a failure in Barrick. Let me put this up here for you, Peter, because it rallied for 3-4 days, and now it's gapped down. It's down about 50 cents from where I would have bought it. And it made a lower low than it did last week, so I would exit the Barrick Gold too. This stock has been going down for 4 years, so I would certainly not want to be in that at this level.
So do you see a test of 1170 or further on gold?
No, I think the first test of Barrick will come down. The test in cash gold, yes. The next test in cash gold will be 1170, which is only less than $50 away, and they can make that very quickly. So 1170 per ounce is the 61% retracement on the long-term weekly basis, and we've hit that once before. But that's the next level I'd be looking at in gold would be 1170.
Okay, so you won't hold any of the gold miner equities for now?
No. They keep going down. They're just going to eat away at your money. I mean, it's just like if it goes up, you don't want to stay short during one of these run-ups because you'll run out of money waiting for a top. So just get out of it. Wait till you see another pattern of support and then go after it. But don't just stay there day after day. That's suicide. That's not any fun at all.
Thank you. Thanks, Larry.
Thank you for calling in. Happy holidays to you, Peter. Okay, we got a caller from New Jersey. Rob, are you there?
Yeah, how you doing, Larry?
Just fine. What can I do for you?
I was interested in what you think is going to happen with the pound. Do you think it's going to turn down or still go up?
Well, I believe as I looked at it over the weekend, the pound was making a really what I thought was a pretty significant double top. And yet Sunday night when it came in, I'll put this chart into Tiger TV, we went through that by quite a bit. Now, we've come back to that same double top level at the 163.50 level, but that push last night, even though it was Sunday night relatively thin, it moved 80 pips above the number that I was looking at. And so I have to really respect that. And I've got to wait a few days, but the pound has been up like 8 days in a row, so this is a normal correction in the pound, but I believe the pound is making a pretty significant top in here. The thing that really surprised me, Rob, is the fact that the U.S. dollar index is incredibly strong, given the fact that it's almost at 81, and we've had the euro, had a huge rally last night and has given it up. The pound had a pretty good rally, the Swiss franc, the Aussie dollar, and they all gave it back. So the U.S. dollar is holding up incredibly well during this time. So to me, it looks like these currencies are ready to go lower.
Okay. And I also had a question about Apple. Does that look like a good short or not yet?
Yeah, I really liked Apple today at the 564, 565 area. That was the ABCD 1.618, and we're already $11 below that. So if you get a little bit of a rally in here, I would take a look. The other thing that you might want to do is to look to sell a call. Or buy a put. That would, if you buy a put, that'll limit your risk, and if you sell a call, that'll get you in. But if the market goes above, 570, then I would say that I would be wrong, and I would certainly want to stand aside. I went into an Apple store Saturday with my kids and my grandson, and it was crowded, but not, totally crowded. But what was amazing is there was these little kids there, 6, 7 years old, just texting away and using these computers. I couldn't believe it. I just shook my head. I mean, it's a real culture there.
Yeah, these kids are all crazy. I actually work in a mall, and the Apple store, I mean, they have people there, but nothing like 5 years ago. They used to be, they would have to have lines and let people in as people left for a couple of years. So Apple's is not like it was, but yeah. Okay, if it goes down, you think it'll go back down to 500 or?
Well, 500 is nothing. That's only a 10% break, my friend, so that's not very much.
Okay, thanks very much. Have a good day.
Thanks for calling in. Happy holidays to you, Rob.
You too.
Got the Dow up, the S&P up, and the NASDAQ up. We'll be back in a moment.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. And the next thing that I wanted to put up was the VIX index chart. And it shows the S&P over the overlaid over the top of it, and it's really telling us that we're at a level that we haven't seen in a very, very long time. And people are also telling us, you know, that the VIX index has lost its ability to do any prediction on fear and greed. We've heard this story so many times over the past that anybody believes that still should believe in Goldilocks and the 3 bears, because that does mean something, folks. It might not mean something today or tomorrow, but longer term, it certainly it means a great deal. So that's what we're looking at, you know, right now. Someone asked us to take a look at the price of crude oil. It's actually held up relatively well compared to some of the other commodities here, because we've been able to hold right near the 61% retracement at $91 per barrel, but we're still a long way from any type of a rally. I think we're having now is just a little short-term rally in crude oil. It would need to get above $95 a barrel in crude oil in order to really be good. I wouldn't even look at crude oil from the long side until we broke below 91, and then at that point I would be looking at it. And here again, it has to do it within the next 3 or 4 days. Otherwise, it's telling us that the market is incredibly weak, and that it doesn't really want to to go any farther to the downside, and then the selling will be over. You get a chance to buy it, but right now I don't see that. The price of gasoline has dropped all over the Southwest here, and we have gasoline under $3 a gallon here in Tucson, and it's only $3.03 a gallon up in the Scottsdale, Phoenix area. So there's been a great deal of deflation, in that area of the market also. So the only thing that I want to leave you with, because I'm pretty sure I know I won't be here Wednesday. I might be here Thursday. It's about 70-30 that I'll be here Thursday, but I would think that you keep in mind that we have the high margin debt. We have the greatest number of bulls to bears that we've had since 1929, and we have the VIX index at a incredibly low, where there is no fear at all in the market. And then also the advanced decline lines are starting to, give way, where the advancing issues versus the declining issues is dropping each day, and that's not a very good thing to be looking at when you're watching these markets from the long side. Remember, it's when you it's hard to pick the exact top, and I'm not saying that you have to do that. I'm just saying just be really careful up in here. The key level today for this next few days would be 1791 in the S&P futures. That's a good 17 points from where we are right now. So I would say that if we get below 1791, maybe this would be the level that it would start at. Someone asked a question about putting a stop in at 1802. That's only 6 points away, and that's just at the low of the day. So whether that means anything or not, I'm not really sure. I believe the 1791 does something, because that means it would be breaking below the weekly low, and that would mean a great deal to me from a technical perspective, that you made a higher high on the week and then a lower low on the week, and that would tell us that things have definitely started to go down. I would like to put a plug in for the Art of the Charts that Tom O'Brien has put out with David White. This charting package is really spot on, boy. It's balls accurate, and I've looked at this thing each day, and it really does a great job of picking out this stuff. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.